All right, you're live.
Okay. I had to check what day it is. Good morning. This is Berna Barche here by myself on April 22nd, here with Wall Street Beats. I guess I will be interviewing myself this morning due to some last minute conflicts on behalf of my colleagues. But there is something interesting in the market that I want to talk about today, a stock that I don't think I've talked about before. I am wearing my dog sweater today because for two reasons. One, the stock that I'm going to talk about it has been a dog lately, and I think it's going to continue to be a dog. And some of that is related to the pet space. So a little theme outfit today. So the stock I want to talk about is Tractor Supply, ticker TSCO. This is the sort of gentleman's farmer retailer. Um, and they were down, the stock was down about 12% yesterday, 11.7%. And it's down 37% from the recent highs, um, which took, which were last fall. And I think those were also the all-time high last fall of around 63, and it's trading just under 40 now. So, it's down about 37% from the highs. It's only about 15% above its 5-year lows, which I think were around $34. So that's the kind of thing that I would normally be poking around to see if there was something to do here on the long side. And so that's what I was doing yesterday and this morning. Usually I like this kind of thing, but I actually think that there's more downside here. And here are the reasons why. So the company put up a disappointing comp of 0.5% on easy compares and noted that traffic was down 1%. Expectations had been for about a 1.5% positive comp. So um, I'm looking at this thing, and the main excuse that they had for why comps were weak was weak sales in pet food, which generally in this company make between 20 and 30% of their sales. And I think it's sort of towards the higher end of that range in Q1, just based on seasonality of some of the other products in the store. So they're trying to spin this as a cyclical issue. But I know from my work on Petco and Chewy that we're well past the tough post-pandemic comps of when there was kind of a pet adoption boom during COVID. So it's too late for that. And based on the comments from the other retailers out there, I don't think they should be seeing the kind of weakness in their pet food business that they're seeing right now. And I think they're trying to attribute it to macro. And my suspicion is that it's something more likely related to share loss, as more and more people move to this online subscription model that we've seen, work so well for Chewy, that's working on Amazon, and is something that Petco has spent a lot of time investing in trying to get a part of as well. So you have this company with, essentially 25% of its business under threat from competitive intrusion or a change in consumer behavior of how people are shopping. They're subscribing and saving for pet food. So 25% of this business is probably going to be under pressure for as much as 10% headwind, maybe more, for the foreseeable future. And I don't think they're being super honest about that. So I don't love it. I don't see a comp turn when we are, going into a more, what seems like a more difficult economic environment anyway. And now you throw something that's secular at it as a headwind, which they're trying to frame as cyclical. And that's really the story. They're trying to make a secular problem look like a cyclical one. And when I look at the valuation here, it's trading around 11 and a half times EBITDA on a PE basis. It is trading at about 18 and a half times earnings. And I think the bias is to the downside on that EBITDA and earnings. And at the same time, the number of locations that they can open is flatlining. Um, as our sales per square foot and EBITDA per square foot. Now, this was a great compounder for a long time because they were opening stores, they were getting margin, they were getting leverage on their growth. And I think the growth in store count has come, more or less to an end. And the leverage on a same store basis, I think it's going the other way now. And so if these guys can't comp a couple of percent positive, I think margins are at risk and therefore earnings are, could come in lower. And so when you look at a retailer that's trading, over 11 times EBITDA, close to 20 PE, with limited growth prospects above ahead, that's really expensive. And yeah, it's down 37%, but I think it can keep going. I think that a valuation adjustment to 10 times EBITDA is not out of the question at all. And that would take it to $34 and about 15% downside. And if you thought that this could get to 9 times EBITDA, that's 25% downside. And the operating margins here are respectable for a retailer at 9 to 10%, but it's not like they are up there at 20% like a Lululemon, or some other, very outlier retailer with very high margins. So if these guys can't comp positive, which I think they can't, margins are probably going to come down, earnings are going to come down, and this is at a premium multiple. So do I think that this, it has a nice, 2 billion of debt on 20 billion of cap. It's not like it has it's like 1 times levered. It's not like it's a, in any kind of risk of financial distress. It's not, a stock that's going to go down 50%. But, could it go down 15 to 25% more? Can it be a category underperformer for consumer discretionary or versus the broader market? I think 100% yes. I would not touch this with the 10-foot pole right now. This is a good company that has run out of growth and still has a growth multiple. So, Tractor Supply, stay away and maybe even think about shorting it. And even if it's that big move yesterday, it's really struggling to stay in the green today, which I think is also negative. Although I'll leave the technicals to my colleague Biggs next time he's on. I'll ask him about it when we're on together. So anyway, I think it's a dog. I'm wearing my dog sweater. That's all I've got to say today. I would take questions, but my friends didn't come to my party today. So I'm going to keep it short and sweet and wish you a great day. And we'll be back tomorrow, hopefully with more of a conversation. Have a great day.